Hey, this is Warren Redlick. Big news for Tesla, and this is going to be a lot of extra profit for Tesla. It's going to really boost the share price in the short term and pretty much in the long term as well. There is legislation in Congress called the Green Act of 2021. It has EV credits, solar credits, storage credits for energy storage. Tesla Semi is going to get a credit. This is going to be a monster amount of extra revenue and profit for Tesla starting this year and going forward as far as 2028. This is going to be a huge boost to Tesla stock now and an ongoing boost to Tesla stock going out for years. It's also going to be a big boost to consumers, to people who are buying Tesla vehicles, Tesla solar products, Tesla storage products. Huge boost to them as well. Before I get into it, I want to thank the Vasa law firm in Sweden and all my Patreon supporters for helping this channel grow. I just issued a new t-shirt discount. T-shirts are here. It's not about you. The t-shirts are on elonbits.com. There's a link in the description below. And there's a link to Patreon in the description below. So let's talk about the Green Act of 2021. Are you ready? Let's go. This is the Growing Renewable Energy and Efficiency Now Act of 2021, or the Green Act of 2021. Congress is in the habit of coming up with goofy names to try to make it look like their bill actually means something. You can see up here, the bill was introduced by Mr. Thompson of California. That's Mike Thompson. I believe he's the chair of the Ways and Means Committee of the House of Representatives. It's a very important committee in Congress. So he's the guy behind this particular bill, although I'm sure there's a lot of others who are involved in it. Now, the provision most people are talking about is Section 401, which is the new EV credit or the change in the EV credit. Critical detail is Tesla exhausted its EV credit when it went through 200,000 vehicles. This extends the credit up to 600,000 vehicles, and it actually extends it more than that. So basically, the way this is written, Tesla would start fresh at 200,000, and after it sold 400,000 vehicles in the US, the next quarter after hitting that total of 400,000 or 600,000 added to the 200,000, the next quarter after selling 400,000, they would continue to get the full EV credit. And then the quarter after that, it would be reduced to 50%, and then it would be gone. So if Tesla sells, let's say, 400,000 vehicles this year, after the bill is passed by the end of 2021, all the vehicles in that first 400,000 would get the $7,000 credit. The credit won't be $7,500, it would be $7,000. The next quarter, the first quarter of 2022, those vehicles would still get the $7,000 credit, and the second quarter of 2022, then it would be reduced to $3,500 for that quarter. Now, there's some game playing with this. If Tesla plays with its numbers and makes sure it doesn't sell more than 399,999 vehicles, let's say before the end of 2021, and it crosses 400,000 in the first quarter of 2022, extends it another quarter. That makes the credit last longer. What really might make sense, since the first quarter of a year is usually a slow quarter, is to try to push that 399,999 limit to the end of the first quarter of 2022. And then you still have a huge surge in production and deliveries in the second quarter and third quarter, where you cross the line in the first quarter, you continue to get the full benefit in the second quarter, and you get half the benefit in the third quarter, because first quarter of a year is usually a low delivery number. The economy slows down in the first quarter of a year. I don't know if Tesla's going to go that extent in playing games, and the challenge here is that Tesla is going to have Fremont pumping out in the ballpark of 500,000 vehicles or more that are all intended to go to the US. We don't know when this bill will pass and be signed and become effective. If the bill becomes effective on, say, July 1st, they're probably not going to manage 400,000 vehicles in the third and fourth quarter in the United States, just the United States. So that could push it further. To try to figure out the short-term impact of this, let's just assume that the average Tesla vehicle sold in this EV credit period, let's say that they sell 1 million vehicles and the average vehicle gets a $6,000 credit. Most of them are going to get a $7,000 credit, but that final quarter at $3,500 is probably going to be higher production. So 1 million vehicles, $6,000 credit, that's $6 billion in credits. And One way of looking at it is Tesla buyers are going to save an average of $6,000 a vehicle. If you get in the $7,000 window, you save $7,000. If you're in the last quarter, you save $3,500. Another way of looking at it is Tesla might have lowered prices more and now does not need to lower prices as much. And they capture some of that $6 billion as additional profit. In other words, the consumers, let's say Tesla in their heads does a calculation. We're going to save the consumers an average of $3,000 and we're going to keep $3,000 as profit. So Tesla's profit for 2021 and 2022 gets a boost of about $3 billion. If you think of it that way, if Tesla works the numbers, works the sales prices in order to share it, but not give all of the benefit to consumers, Tesla gets an extra $3 billion in profit over those next 2 years. And that's just from the EV credit. Now, the reason this doesn't matter in the long term is because we're looking out to 2030 and Tesla's profits in 2030 are going to be so large that $3 billion is just a blip. It's not nothing, but it's relatively small. It doesn't have a huge impact. When you look at how I view Tesla in the long run, I see a company that is going to be pumping out tens or hundreds of billions of dollars of profit or more in 2030. And that $3 billion is just a drop in the bucket. It really doesn't move the needle. Doesn't hurt, and especially in the short run, it helps. And especially if you want to buy a Tesla in the next year or so, it helps. I'm looking for myself. I'm expecting to get a Cybertruck fourth quarter 2021 or first quarter 2022. I might get the full $7,000 credit on my Cybertruck. If your Cybertruck order is here later, you ordered your Cybertruck 6 months or a year after the reveal, you're probably going to be pushed out far enough that the credit will be gone. There's always a chance that Congress will extend the credit again, but right now, for Tesla owners, this is the boost. And that short-term boost matters for short-term share price because Wall Street looks at the short term. So if this bill passes and you can look at this and say, you know, for 2021, this is probably going to be $1 billion in extra profit for Tesla. Wall Street usually likes that sort of thing. And it's an extra $2 billion in profit in 2022, let's say. The Wall Streeters like that sort of thing. If you can see that short-term boost in profits, that's going to help short-term share price. Really, to me, doesn't matter in the long run for share price. It's not nothing, but it's tiny impact. But for the Wall Streeters, it's a big deal. Not talked about as much from what I've seen is the solar credit. The investment tax credit for solar energy property. This one might be commercial. I'm not really sure whether this is commercial or residential. There's another one I'm going to show you in a minute that is residential. But the tax credit for solar is extended 30%. It's the same credit with the residential thing I'm going to show you next. 30% through the end of 2025. So if you were thinking of buying a solar roof or solar panels, you're going to get a 30% tax credit through 2025. And it phases down not by very much, 26% in 2026, 22% in 27, and then 10% thereafter. So as long as you're getting solar between now and the end of 2026, you're going to get a pretty big tax credit. And even 2027, it's a pretty big tax credit. And this is the residential credit and includes solar, electric. It also includes small wind energy, interestingly. I don't know if anybody's going to do that. And this also includes energy efficient commercial buildings. You can see it breaks there. The credit for residential property is about the same as 30%. It looks like it goes longer to the end of 2026 and then drops to 26% in 2027. So if you're going to do solar on your house in the next 6 years, 7 years, you're going to get a significant tax credit. And that's going to help. That just saves you money. And again, this is the type of thing where Tesla can do it so that the consumer gets all of the benefit, or it could be something where Tesla says, you know, we don't have to lower price as much as we thought. That could increase margins for Tesla. And if Tesla is really going to ramp solar roof, this could be maybe 2022 when solar roof really starts to ramp and the solar panel installations really start to ramp. This could be this could be hundreds of millions of dollars in extra profit for Tesla. It could be in the low billions over the next few years. So again, this is the kind of thing that can move the needle for Wall Street. And again, you get out to 2028. Honestly, this one has a bigger impact because it doesn't have a cap and it's a substantial credit and it goes a long way. So depending on the extent to which Tesla expands its residential solar program, this is a pretty big deal. Another key detail I don't see a lot of people talking about is this credit is extended to energy storage technology. Powerwall is going to be covered by this. I think PowerPack and Megapack might be covered by this. As long as you have a minimum capacity of 5 kilowatt hours, well, Powerwall is like 13 kilowatt hours. So you're going to see that 30% credit through the end of 2026. You install a solar roof And I don't think that Powerwall and PowerPack and Megapack were included before. This is a newly eligible property. You can see up here. You can see up here, this is newly eligible property. So they've added Powerwall, PowerPack, and Megapack to property that benefits from this tax credit. So if you were going to get a Powerwall, now you're getting a monster tax credit. I'm looking at getting 3 Powerwalls on my house and solar roof. And I was expecting to get a tax credit on the roof, but now I'm going to get a tax credit on the Powerwall too. So yeah, I was looking at spending $22,000. I think 3 Powerwalls will be $22,500. If I'm going to save 30%, that's like $6,000 I'm going to save. And on the other side of that, if Tesla was going to be able to lower the price of Powerwall and decides not to because it doesn't need to, because consumers like me are already thrilled to get the break I'm getting, that's incremental profit for Tesla as well, and it could be substantial. Something no one else is talking about that I've seen is there's a provision for people or entities that have lower tax liability in a given year. You didn't make that much money in a year. You're not expecting to pay taxes. It allows you to be treated as if you had paid taxes up to 85% of the value of the credit. So for someone who wouldn't have qualified for the credit because of their tax situation that year, now you get up to 85% of the credit. As it says, this allows entities with little or no tax liability to accelerate utilization of these credits. Nice little feature that's going to help extend this a little bit more. And another thing that I didn't see anyone talking about, this creates a manufacturer credit for the sale of zero emission heavy vehicles. That's Tesla Semi. Eligible manufacturers may claim a credit of 10% of the sale price of an eligible vehicle, capped at a credit of $100,000 per sale, must weigh no less than 14,000 pounds, must not include an internal combustion engine, and must be propelled solely by an electric motor which draws electricity from a battery or fuel cell. That is Tesla Semi. Tesla Semi is probably going to weigh more than 14,000 pounds. I don't know for sure, but I know they were planning to be able to carry cargo of 45,000 or 50,000 pounds, and it's a total of 80,000 pounds that it's going to be. So I'm pretty sure it's over 14,000 pounds, or they'll make sure it's over 14,000 pounds. And there's no cap. There's no number of, same thing with Powerwall, same thing with solar. There's no caps on these. It's only for this particular credit to the end of 2026. So as many semis as Tesla can sell, if they're charging $180,000 a semi, they get $18,000 in credit. If you sell 100,000 semis in the United States in that time period, 18,000 times 100,000, that's $1.8 billion in tax credits. That's another big boost to Tesla's bottom line, and another thing that's going to help shareholders. And it's another thing that's going to persuade Wall Street this is a good stock to invest in. Of course, this is a proposal that's in Congress. It hasn't been passed. It's going to have to get through Congress, although if the chairman of the House Ways and Means Committee is behind it, it's got a pretty good shot. Nancy Pelosi's family, she or her husband bought over $500,000 in Tesla options. This is going to be good for her. If it boosts Tesla's shares price, she's going to make a lot of money. I'm not saying it's right that our political system works that way, but that's how it works. I don't think Joe Biden's going to veto this. I don't think it's going to meet a lot of resistance in the Senate. So this looks pretty good. If you are a short-term Tesla shareholder, you're looking at short-term share price. If you think this thing is going to go through, you're going to see Tesla's short-term profits spike over the next year, 2 years out to 2026. It's a big boost to Tesla in tax credits. Since I started making this video, I decided to try to run these numbers on a spreadsheet. So here's my spreadsheet. What you can see is ballpark, I've got about 1 million vehicles sold getting the credit. In 2021, they get the full credit of $7,000 per vehicle. And the way I'm doing this is I'm figuring Tesla is structuring its pricing so that the consumer gets half of the tax credit effectively. That Tesla doesn't lower its price where it might have. So effectively, Tesla captures half of that tax credit. So here where you see 390,000 vehicles sold in the United States in 2021, you multiply that by 3,500, which is half of 7,000, and you get 1.3 or $1.4 billion that Tesla gets effectively an increase in revenue or profit, however you want to work it. And then in 2022, I reduced the share of the credit because now it's half at the $7,000 level and half, let's say, at the $3,500 level. So I ballparked it at $2,500 per vehicle. So you get 600,000 vehicles sold, and that works out to $1.5 billion extra for Tesla. I looked at solar and storage as well. And you can see here, starting with 2021, let's assume Tesla installs the equivalent of 100,000 solar roofs, solar reef retrofits with power walls or megapacks. I'm just lumping it all into one, and I made up a ballpark number of 100,000 units times $40,000. I'm not saying it's right, but it's in the ballpark. And you figure from that, what's Tesla's share of the tax credit? The tax credit's 30%. You figure Tesla is able to capture half of that tax credit, or 15%. And so you can see, and 15% of 100,000 units at $40,000 works out to $600 million extra for Tesla in 2021. And going down as Tesla expands solar and storage. And I just honestly made up numbers. I think it actually might be larger than this, but I made up numbers. And you can see this is actually where a lot of the money is, that you go out to 2026, if Tesla installs the equivalent of 1 million units, which is a combination of solar roof, solar retrofit, power walls, and megapacks, etc., they get $6 billion in extra credits by getting half of the credit. And then I went over here to semi. I said, okay, let's assume Tesla makes 10,000 semis in 2021 and it expands, and I capped them at 100,000 units. The North American market for semi is about 250,000 units. I'm figuring Tesla captures half of the US market. That's probably a lot, but these numbers don't matter a lot when you add it all together, because it's just not that much money compared to the solar side of it or the vehicle side of the EV side of it. You can see here in that first year, Tesla would effectively capture, instead of getting $18,000, 10% of the $180,000. You figure Tesla effectively captures 9,000 of that dollars. And that works out to 90 million in the first year and expands up to 900 million a year from 2023 to 2026 when that credit expires. And the total credits you can see over here, just in 2021, it's an extra $2 billion for Tesla. And extending down, 2026 is the big year. It's $7 billion. It tapers off and ends in 2028 is the last year that they make a lot of money on it. But this is huge, and it adds up to $33 billion in extra revenue or profit to Tesla over the next several years. So this is a monster gain for Tesla. And if you are thinking about investing in Tesla, I'm not a professional investment advisor. I'm not qualified to give professional investment advice. But I see a company that was already growing and already poised to make profits, and now I see an extra $33 billion in profit over the next several years. And just in 2021, I see an extra $2 billion in profit. This is crazy money. This should be a huge, if this goes through, it's a huge boost to Tesla stock. Now, I could have something wrong in my analysis. I think I'm right. This was just a first cut. So in the comments below, let me know what you think about that math, that spreadsheet calculation. Do I have my numbers right, or did I get something wrong? I took the credits that are generated by the transaction, and I figured Tesla captures half of whatever the credit is. Is that the right amount? I don't know. Am I far off? I don't know. Am I overestimating the amount of solar and megapack installations? I don't think so. I think megapack and Powerwall and solar are going to go crazy, and I might be underestimating it. But those are some numbers I came up with. See if that helps you think this through. And tell me what you think. And the Gordon Johnsons of the world can whine and complain that Tesla's really making its money off tax credits. I don't care. It's making money because it's making money, because that's the system we live in. Did I choose this system? Do I think this is the best system? No, I don't think it is. But that's the system we have. Personally, I don't like the idea of having this cap and playing games with how many vehicles. Just set a lower credit and let it run forever. The other thing is, does this help the competition? Well, yes, everyone's always saying the competition is coming, and it is true that if some other EV maker is producing a lower volume of vehicles, they're going to enjoy this credit for longer. They're going to get the $7,000 credit for years because they don't produce enough volume. But 400,000 vehicles is not a lot of vehicles if Tesla's going to be producing millions of vehicles. So until somebody comes along with a truly competitive vehicle, and a lot of times you'll see these vehicles, somebody says, oh, we've got a vehicle that's going to compete with the Tesla Model S, let's say, and it's more than $20,000 more expensive, doesn't have the range, and doesn't perform as well. Giving that vehicle a $7,000 price break isn't going to help. It's still going to be $13,000 more than a Tesla Model S. It's still going to have less range. It's still not going to perform as well. I haven't seen the Model 3 and Model Y competitor on the horizon yet. The $7,000 matters more when you get to the lower end of the market, and we'll see when those vehicles come. The Volkswagen ID4, it's not really that competitive. They're not really producing them in volume. Until you have a vehicle that's competitive with the Model Y and the Model 3, and you're producing it in volume, it really doesn't matter. Same thing with pickups. Cybertruck's going to be coming out. You're going to come out with a competing truck. Maybe it's Rivian. I think Rivian's starting at like 70 grand. Are they, and I don't even know if that's correct, if that's the number. Is Rivian really going to be cost competitive with the Cybertruck dual motor? Certainly not. You know, the Cybertruck dual motor is going to start at $57,000 with FSD. I hope it helps some other EV makers to come along. We need other EV makers in the game. I would love to see Rivian succeed. I would love to see some others succeed because there's plenty of room in this market for Tesla and other EV makers. We need to replace 2 billion ICE vehicles. So that's my take on the Green Act. What do you think? Please let me know in the comments below. Please check out my other videos. I think if you like this video, you're going to like some of my other videos. Support this channel on Patreon, buy the t-shirts, elonbits.com. Subscribe to the channel, smash the like button, and thank you so much for watching.